Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 31st of May 2020. And as a brief reminder, yesterday we published our Gold and Silver Weekly Update for the week ending the 29th of May. And if you haven't had an opportunity to watch it as yet, we've placed a link in the description box below. We highlighted in yesterday's video that gold fell slightly last week, but silver rebounded strongly. And we could expect to see higher prices for both this week, as the US unveils additional economic data and geopolitical issues dominate the agenda. Now, today, as it's approaching the evening, in fact it's 2000 hours GMT plus 1, and after spending a delightful time, most of it on our veranda, watching the waves of the sea, and the sun beating down like an unforgiving parent, scorning us with its heat, we thought we would just briefly touch on everyone's favourite subject. Yes, you've guessed it, banks. This, though, is not about the Fed necessarily or the Bank of England, but really most banks, your high street banks, the ones you find on the corner of your road. You see, since the breakout of the COVID pandemic, governments and central banks have put together various packages of assistance to help individuals, families and businesses, including limited companies and self-employed people. In the United States, cheques have been delivered to every household, and this seems to have been common practice there. While in the United Kingdom, we have had to rely on claiming various forms of benefits, grants and loans. The loans, albeit at favourable rates, grant you. But that said, many people have fallen between the cracks, and especially a number of businesses, particularly smaller businesses. Now, there was an article published in Financial Advisor, which is the newspaper published by the Financial Times that is given to investment advisors, and we receive a copy each week. Now, this one arrived yesterday, and we'd like to read an article to you just now, and then we'll comment on it immediately afterwards. Article published by Alison Steed, freelance journalist for Financial Advisor magazine, dated 28th of May. Headline: Another rule for banks. Subheadline: Not so long ago, we were bailing out the banks, but now, when it is businesses that need help, none can be found. Quote: There is nothing quite so annoying as helping someone out in a time of crisis, only to discover, when the position is reversed and you need help, that someone seems to be terribly busy. That is exactly how I feel the UK's banks are behaving right now during the COVID-19 pandemic, as millions of people and hundreds of thousands of businesses find themselves facing financial ruin, closure and even bankruptcy. It was only 12 years ago, at the start of the financial crisis in 2008, that the banks themselves, in a situation of their own making, let us not forget, were going to the UK government cap in hand, asking for help. The government gave the help they said they needed, because the feeling at the time was that the banks could not be allowed to fail. It was unthinkable, impossible. It would create such a level of damage to the economy that we would struggle to recover from it. And we did, to be fair. The years of austerity that us taxpayers endured as a result of those hefty bailouts had barely come to an end before the COVID-19 crisis hit. However, we did it. We were in it together, as it were. There were also some people who had undoubtedly benefited from the way the banks had been operating. For example, some people on self-certification mortgages were clearly unable to qualify for some of the loans they received to buy property. But they got them just the same, and the properties they bought with them saw their prices rise over time. Yes, there was a property crash that followed the crisis, but it was relatively short-lived. Now, I do not mean to denigrate anyone who really suffered during that period of time either, because to be at risk of losing or to actually lose a home is quite possibly one of the worst things that can happen to you. Yet there is no question that even if you became a property magnate in the years that the banks were playing fast and loose with the rules and packaging up their securitized loans, you still would not have benefited anywhere near as much as the banks themselves did. So fast forward just over a decade to now, as we all try to navigate the COVID-19 crisis, and what it means, not just in terms of whether or not we can see our friends and family without having to wear a hazmat suit, but for businesses and individuals who are finding themselves on the wrong side of the financial impact. Around a quarter of UK employees have been furloughed in the United Kingdom, according to figures from Her Majesty's Revenue and Customs. Some 800,000 businesses had laid off staff temporarily as at May 3rd, with the cost of the government's furlough scheme expected to be between £39 billion between March and June, according to figures from the Office for Budget Responsibility. Chancellor Rishi Sunak has now extended the scheme to the end of October, as it becomes clear the impact of the COVID-19 lockdown will be far-reaching, both economically and socially, for the United Kingdom and other countries around the world. This furlough scheme is just one of the ways the government is helping to support the economy. Another key way was by providing loans to businesses that were viable before the crisis, so they could continue to survive while it plays out. These loans, as would seem to make sense, were supposed to be passed out by the banks. Now this money, which is as near to interest-free as it gets, because the Bank of England base rate is currently 0.1%, was intended to be passed on to businesses at low rates, so they were able to take the loans, get back on their feet and start trading again as soon as allowed. Instead, the banks made it extraordinarily hard for businesses to access these loans in a time of crisis, and anecdotally, rates being offered were as high as 30%. Business owners were also being asked to put their own properties up for collateral against the loans. If this is not a perfect example of a rule for one and one rule for another, then I do not know what is. So now the government has stepped in again, backing the bounce back loan scheme 100%, so the banks are not taking any risk in lending to businesses. Yes, you know, the banks that had no problem taking huge risks previously that resulted in us, the taxpayers, standing behind them before. Well, here we are doing it again. I do not normally get so frustrated by the mechanisms of capitalism. I appreciate that there are difficulties on all sides, and the banks were asked to repay their own bailouts over time. Many have done so and completed payments that gave the government or taxpayer interest on that money too. That is how the economy works. But to have forgotten so quickly how they had to swallow their collective pride and ask for help, that they are unwilling to give other businesses finding themselves in a similar situation now, which has nothing whatsoever to do with their business practices, sticks in my throat. I only hope that when the dust settles on all of this, there is an investigation into who did what at each bank in relation to these loans that should have helped businesses at the very beginning, and appropriate action is taken. But I am not going to hold my breath. End of article. Now, frankly, this situation is grossly unfair and wrong. The BBLS, or Bounce Bank Loan Scheme, which the author referred to at the end, is a scheme or program which theoretically is designed to help businesses or self-employed people claim loans ranging from £2,000 up to 25% of the business's turnover, the maximum loan amount being £50,000, and you have up to 6 years to repay, with the first year being payment free. The rate of interest is charged at a modest 2.5%. Sounds great for small businesses until you try and to apply. Now, first of all, only a relatively small number of the main banks offer this scheme. The big 4 or 5 offer it, but then as you go down the chain, you find fewer and fewer. And other banks are planning to offer it, but they haven't put all of their systems together yet in order to do so. Also, according to the government, you do not have to be a customer of that bank in order to make a claim for that loan. And it's 100% backed loan by the government, so the banks take no risk. So we thought perhaps we'll try and make a claim, really to see how the system works, and £50,000 or a similar amount would be very handy at 2.5%. Well, firstly, our bank, which was one of the smaller ones which we've chosen because of its personal service, did not offer the scheme, and said it would take some time before they would be ready to do so. Now, out of the list, now this was a little while ago, admittedly, out of the list that was provided, all of them, bar 2, said that you had to be a customer with them. Yes, all bar 2. And yet the government says you don't have to be a customer with the bank. So we applied to one of them and never heard from them again, and could not reach them when attempting to do so by phone, and numerous emails were left unanswered. We then applied to the other bank, which said that we do have to set up an account, but they would call it a feeder account. In other words, it would just be an account set up in order to repay the loan, and it would only take 15 minutes to complete. Well, it did, at least until we put in our ID, and then we had to wait 3 days for them to verify it. They verified the ID, that was fine, and we thought, great, we can now put the claim in. So we typed in the claim and we received a message. These are not the exact words, but they're close enough. If we decide to offer this loan to you, we will let you know. Please be patient, as existing customers who use us as their main bank account will have priority. If we deem you eligible, we will contact you again. And that was over 2 weeks ago. And nothing has been heard, though we did receive a debit card for opening the account. Now, suppose for a moment when we had lockdown, we were desperate for funds. Nearly 3 months have passed, and still we'll have received no money. So we actually get and understand what the author is saying. Now, there are other loans available, but we would not qualify for them as our income is above subsistence level. If it were not, we could claim benefits of up to just over £90 per week. Yes, this is the wonderful system we have, and the banks have failed to deliver the help that was needed when it was required, and we are not alone, rest assured. Okay, now do not feel too sorry for us, as we will survive, but if we were in the position of many thousands of other businesses, we would now frankly be on the scrap heap with the business in tatters. Is it all the bank's fault? No, it's not. But they certainly haven't been that helpful either, or certainly not that quick in responding. And especially bearing in mind those loans are 100% backed by the government. So there is no risk on the bank's part. It's a funny old world. Have you or someone you know experienced something similar? Obviously, systems are different in different countries. We appreciate that. But have you had problems trying to access either funds or handouts or bailouts without necessarily, of course, revealing your financial state? Don't do that. But it'll be interesting if you know someone who's undergone similar experiences. And it is a shame, because I, coming from a banking background, remember the times when we were pretty responsive in fairness, but we are going back a long time. Yes, we were very old-fashioned, and yes, you had to go through various hoops, and yes, we didn't just lend to anyone. But we certainly made, at the branch level, certainly, we made every attempt to be as obliging as we possibly could, and certainly tried to respond as quickly as we could. Now, with systems doing 90% of the work, it does surprise even us that the banks cannot get something which is relatively simple put together and operating effectively. Do share your experiences, and tomorrow we shall get back to gold and silver. Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to this channel and press the bell sign so that you're notified of our videos as and when they're published. Not forgetting, we update our Richard and Greg channel, and there will be a video going up on that. We did promise it for today. It's actually going to go up tomorrow. Greg, unfortunately, has been somewhat detained, so I haven't been able to publish it with him. But also, we thought it good to wait for the weekend's figures on you-know-what to be published, and then we can cover that in tomorrow's video. Thank you once again. Tomorrow, we will get back to gold and silver. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com. And if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.